Hello, everybody, and welcome to Ep.4 of Quarterly Learnings. My name is Andrew Pate. I'm one of your hosts here. To the side of me, we've got Ryan Rand sitting here in front of the Fightin' Texas Aggie band in Kyle Field. And below us today, we have Justin Holder, who apparently is on the International Space Station or something of that nature because he is out of this world. As you can see, if you're watching us on YouTube. As you can see, if you're watching us on YouTube today, I have a fake campfire and mountain background for me today because that's where I'm currently filming this podcast. And today we are glad to have you with us. If you haven't already, make sure you subscribe, like, and unsubscribe and resubscribe and unsubscribe and resubscribe below. And welcome to the show. Let's kick it off. Justin, I know you've got some hot breaking news for us today.
Yeah, well, it's semi-breaking news, but I got a little interesting name for you. I'm going to call it Mickey D's Dirty D. I don't know if you... So, I don't know, Pete, I think you might be the expert on this one for some reason. I don't know why I get that feeling.
So I take offense to that. That's assault, Adam Schefter assault right there on myself. So if you don't know, the McDonald's former CEO is marred in some scandal recently. That's the nicest way to put it. The TLDR of the situation is that he had consensual relationships with several female direct reports of his as the CEO of McDonald's, and apparently that was against corporate policy, and he was terminated from McDonald's. I know, shocker. He was terminated from McDonald's with only a $65 million exit severance package. You know, if we can get that, even maybe 1/76 of that for this podcast, we are going to shut this podcast down and we're going to buy a beach house.
We will sell out.
We will sell out. That is, we are very transparent of that. But where we're going with this, and that's not the newest development. The newest development is that the McDonald's CEO has filed a counter lawsuit to the board of McDonald's original lawsuit, trying to get some of his severance package back. What is the basis of that lawsuit, you might wonder? The former McDonald's CEO has said he was so negligent and so grossly incompetent and so out of line that it's actually the McDonald's board's investigators' fault that they didn't originally discover that he was acting so unethically, that he actually then deserves to keep all of his $65 million in severance package of stocks and cash and options. That my brain is already melted just trying to explain this. It's just one of those things, guys, that it's like, really?
You're grasping at straws. You're throwing a Hail Mary when you admit complete negligence so bad that they should have caught it earlier.
That they should have
done something about it before.
I should have been caught robbing that bank because I stared right at that security camera and I said, my name here is Al Capone, and you will never, ever catch me except the fact that I am screaming right into this security camera and I'm still keeping all this money, and you can see me in court and I'm going to win. That's basically what he's telling
If
him.
y'all see me ever wildly being negligent and just a complete ass, just know I'm trying to get my severance of $65 million. Yeah, okay. That's what I'm doing. If you didn't already know.
Damn, that guy needs a Big Mac. Is he fat or what does he look like?
I don't know, dude. He's another middle-aged white CEO. What can I say? My guess is he was not a former Stanford athlete. But anyway, we can move on to what's up, what's down.
God. All right, I'll kick it off with this one. So what's up for me is, I don't know if y'all have seen it, but the new Batman trailer coming out in 2021, starring Robert Pattinson of all people.
Twilight.
I'm not a big Twilight fan, but apparently he's done a little more than that. And dude, it looks fucking amazing. Like, I've never been this excited for a superhero movie before. I'm not a big superhero guy. I like the Marvel movies and stuff, but DC's kind of shit the bed recently. But this might be their little comeback.
All right, so we should mark down DC Comics not going to sponsor this show anytime soon. All right, that's marked down.
Hey, I gave them some credit for what they're doing now, not what they did before. I think they'd admit they had some failures. Anyway.
where is Robin Pattinson going to land on the scale of Christian Bale, Michael Keaton, or Ben Affleck? What's he going to land closer to?
I think dude, just watching this trailer, it's getting dark. He has a chance to land higher than Christian Bale, I think.
Ooh, whoa, shots
I know
fired.
that's a hot take. I know. I love Christian Bale, but he might win this one, man. Like I'm this is coming from someone that makes fun of Twilight and Robert Pattinson all the time. So yeah, I got some faith in him. Just watching the trailer, even though he does wear eye black. I don't know about that one, but
Oh, so we have an emo
more
Batman.
realistic. Yeah. He's applying to the Gen Z people. So a little more serious vein, somewhat related to superhero movies. Unfortunately, we do have the passing of both John Thompson and Chadwick Boseman. Just both incredible human beings. For those of you who don't know, Thompson was 27-year coach for the Georgetown Hoyas and was the first African-American head coach to win a championship in basketball. Boseman, as I'm sure all y'all know, had iconic roles in Thurgood Marshall, Jackie Robinson, played James Brown, and King T'Challa in Black Panther. So both guys, incredible men in their industries, just embody true grit, hard work, determination, and both in the face of adversity, kind of each in their own way, but complete inspiration to everyone. I know all of us got some inspiration from them, and even though this is kind of my down for the week, it's also kind of the up, just to celebrate their lives and much respect to them and their families. So.
Yeah, Justin, you and I were talking about this earlier. Like, John Thompson was, to tie it in, was kind of he's kind of, you can consider him the Jackie Robinson of black
Right.
men's basketball coaches. He coached some Hall of Famers like AI, Patrick Ewing, Dikembe Mutombo at Georgetown, and just was a true trailblazer and where the sport needed to go. And he was several years ahead of his time, and he's going to be dearly missed in the sport for sure. And then and Chadwick, I mean, talk about the just definition of grit, grinding, a grinder, and a true professional. The guy was fighting colon cancer for 4 years, and I will self-admit I did not even know he was suffering.
No one knew except for his close friends and people he worked with.
Yeah, and you're suffering from that. You're fighting that. You're getting surgery. You're getting chemo, and you still go out and deliver some of the most iconic roles that you could ever imagine. I fully encourage anybody listening to this to go. The clip I watched personally was when he was on Jimmy Fallon's show, and they were having black people speak to a picture of him and saying what he meant for them in terms of not only representation but where they could, of how they could see themselves on the big picture, and that they hadn't seen that before, not only in superhero movies but also other movies that were in characters that were revered by such a wide audience. Those two, it's truly unfortunate that them, and along with the loss of Kobe early this year, this has just been a shit year flat out for black icons. We've lost several way too soon, and it's just truly unfortunate.
Yeah, I mean, you see LeBron James and other athletes honoring Chadwick, and that just shows what kind of impact he had just across the country. I mean, he was there to kind of support athletes in their journeys and then make them feel proud for who who they are as people as well. And that just kind of shows the kind of person that he is and the impact that he'll always have on this country and everybody out there. Is a great person.
Absolutely.
Oh, damn, man. All right, Ryan.
Hard to move on from that one. Yeah.
Ryan, what's up for the week?
My what's up for the week is Tesla, and more specifically Elon Musk. I don't know if you guys saw on the news this week, he passed up old Marky Mark from Facebook as on the wealth chart. That guy is just continuing to grow as his stock grows and as his popularity grows.
So do you think
mean,
he listened to Good Vibrations while he passed him up?
Probably.
Anybody?
That guy, I think he's going to end up being one of the richest. Everybody thinks that Tesla's going to crash and bottom out.
I hope at least Pate got that joke.
Good
Whatever
vibration.
Ryan said.
Yeah, that's shot over.
The only Marky Mark song, and Marky Mark and the Funky Bunch song anyone ever knows. I think he has like a couple albums, and I don't think anyone knows any of the other songs. So,
For anybody listening, Justin is referring to Mark Wahlberg from Boston, but who he actually passed on the richest list was Mark Cuban, famous Dallas. What do you call them? Dallasites? I don't know. People from Dallas. That's who he passed on the world's richest list. But let's be real.
Crazy.
We know that Elon was probably less likely to pay attention and notice that than he was implanting neurological devices inside of pigs. And
That was a
announcing
joke.
that.
Oh my god.
What a guy.
Ryan, I'm gonna relish this one. What's down for you?
I thought it was, I still think it was Zuckerberg that he passed. I don't know.
Whatever. Mark, the other Mark, anywhere a Marky Mark.
Just don't think it's actually Marky Mark, people.
Mark Wahlberg is rich, but he's not up there yet.
The down for the week for me was the Mavs being eliminated. I know we talked about it earlier. They put up a good fight, but they were officially put out of their misery by the Clippers, who will most likely win the whole thing. So, we'll see.
Yeah, that's not going to happen.
Yeah, we'll see. I don't know.
All right. My what's up for the week is Warren Buffett's birthday candle bill. Warren Buffett just turned the 9-decade mark in his 90th trip around the sun here on planet Earth. And to celebrate that, he went and bought a whole bunch of stock in some Japanese conglomerates that was reported earlier today. So that's what my what's up. Congrats to Warren Buffett on his 90th birthday and still going strong and teaching the investment world how it's truly done with a long time horizon. And my what's down for the week is Kevin Mayer's LinkedIn profile. So TikTok's global CEO, maybe 3 months on the job, and he has since resigned due to the impending sale to at this time of this recording, an undefined U.S. company. We have Microsoft and Walmart tag teaming against Oracle and potentially Twitter, and Netflix was eventually approached in the discussions. It remains to be seen who that will be. Probably by the time this is out, there may be an announcement, but at the time of this, we don't know. But yeah, Kevin Mayer's having to do some serious updating on his LinkedIn profile, going from Disney to TikTok, and we will see where he ends up next.
All right. Well, you know what it's time for, right, guys? Your favorite segment and mine, of course, Justin's pointless question of the week. This one y'all might actually enjoy. So honoring all the fantasy football players and the respective drafts out there. I know we have ours tomorrow on Ryan's birthday, I might add.
Yeah, not gonna lie, I forgot about that until maybe today.
The draft, yeah.
Sorry, I got the first pick.
I might just
I have the last pick, and I'm just gonna say collusion. That's it.
I'm not complaining here. Anyway, so the question I got for you this week is, so what is the ideal fantasy football draft destination? And we're going to keep it to let's say a 36-hour window, and that includes travel. So where are you going? What are you doing those 36, give or take, hours?
So I'm going to start off, Ryan. I'm going to steal your long lost to COVID bachelor party destination of Las Vegas.
All right.
Less so because that was your bachelor party destination that was lost to the wind, but more so, we've seen it with the league. You go to Vegas, you get Chad Ochocinco to come and do your draft board. You have an excellent fucking time. And that's why I'm going to pick Las Vegas for 36 hours. You make your drafts, you tinker a little bit, and then you are good to go. And then you go out to the clubs and you hit the slots and you hit the blackjack tables, and you forget the fact that you drafted Christian McCaffrey that high. So I say that, and I have nothing.
I want McCaffrey.
I have
Who do you think
nothing
I'm
against
taking?
McCaffrey.
That's
I
who
have
I'm
nothing-
taking at number 2, hopefully.
What do you mean?
All right.
Hopefully, he's
I will,
gone.
I will
think?
revise that statement to OBJ.
There you go. That's more cool.
No Browns.
Ryan, where are you going, man?
I was leaning towards Vegas, but I mean, I think since last year we drafted in New Braunfels and floated the river, that was a good time. I think we should keep that a tradition and go do that again, get hammered, float the river, just hang out, and then get back and drunkenly draft our teams. I mean, that was a lot of fun. A good Texas destination.
I
Can't really beat that.
I think you hit the key point there is do something stupid beforehand to where you're not in the right mindset to draft, and so you have stories to tell later. Mine ideally is like go to either like a lake house or float the river or something. If I had to pick and I could go there fast, I'd do like Lake Tahoe or something. Rent a nice like cool house, cool cabin that can fit all 12 of us, whoever it is. Go hang on the lake for a couple hours, get drunk with each other, hang out and shoot the shit, then come back, draft in a terrible mindset. Someone's going to make some stupid choices, say something stupid. Someone's probably going to get a fight. I don't know. And maybe go out that night. Probably not. I'd probably be too tired. And then wake up early in the morning, go play a hungover round of golf, and get the heck out of there. I think that's the ideal one for me. I don't know if y'all are on board with this, but I think this year we're doing our punishment as the loser has to caddy for the winner in the next year. So
beats any of the social media punishments y'all were trying to come up with.
Yeah, it's a good one. I don't know if they'll actually do it. Well, it depends on who gets last.
Yeah, if I lose, I'll do it.
It's not going to be me, so it's fine.
Exactly.
It's not going to be me either. Famous last words. But yeah, our loser last year, let's just say, was not participate. He was not very participant. I don't know.
We need to kick him out if he doesn't do it again this year.
He sucked. He didn't do it.
Yeah.
Yeah, they need to be kicked out. That's ridiculous.
Or pay a fine, a hefty fine, or just do the thing. Do it for the content.
Yeah,
Let's go.
Zach, you hear us? We are kicking you out.
Direct shots fired at you. You're no
also
longer
a little
in the league 2021.
Little side note too. I am the banker this year again, and
Yeah, you're Switzerland. We've established this like 4 years ago. You are Switzerland. We send you all of our dirty money. You're expected to clean it, and then you're expected to redistribute it to the winner of our not so much choosing, because it's usually people who don't want to win.
This year, what you got to understand is I'm invested in the stock market, and I'm going to double that money illegally. And then give it back when someone wins. It's probably gonna be me, so it won't matter.
Good luck
I'll be
explaining
lost.
that to the league whenever you lose on like a Tesla call.
I'm not Ryan.
Just buy all the Tesla calls. You'll triple your money.
I think you can buy one Tesla call with $1,000. So,
But if you do a call
maybe, if
debit
you're
spread,
lucky.
you can buy like 2 or 3.
Ryan,
Okay,
you need to make
we're
that
not
video,
going into
man.
those. We're not going into those.
All
the
right,
key.
let's get into just the real topics. Although we could probably talk for a couple hours on that if we really wanted to.
We could, but then people are going to switch over to Pardon My Take for some actual real sports info and advice. Maybe Pat McAfee show instead.
You can't mention that podcast. That is our direct competitor. They are a level with us. We are a little bit higher, but I digress. Whatever.
In maybe an alternative universe.
Mount
No
Rushmore.
faith, man. No faith. All right. So I guess we'll jump over
but we
to.
are 5 years off from even sniffing them.
I'll take that.
Mount Rushmore of worst stocks.
No, that we need more liquor for that.
Oh man. All right, Randy, man. I'll jump over to you first. I think we're gonna talk about a little bit of Zoom earnings calls coming up, and what.
No, sir. They were today. You are terrible.
Oh
with
no.
this semi-hosting gig.
Yeah,
Fired.
Zoom
Man.
dropped their earnings today after hours. And as of right now, they were up like 23%. Absolutely
Because
crushed.
why not? Because why not?
Because why
'Cause
not?
nothing matters.
If you put $1 million in Zoom, which I'm sure there's people out there, they made $250,000 overnight. I mean, why not? it's 2020. Let's have some fun.
So
But anyways,
I just want to say that my company was using Zoom before it was the go-to video platform for COVID-19, officially sponsored by the pandemic. I never saw this coming, flat out. Like in terms of just a 6-month global adoption of a software, it's incredible, and props to them. But anyway, continue, Ryan. Sorry.
yeah. So even at the firm that I work for, we also adopted it very early. And I remember sitting in a meeting when they were dropping. I was like, "What is Zoom? Like, what is this?" And there are these people logging in from I don't know where, like trying to teach us how to use it. It was like this foreign object to us, and then now look at us. We're all using it every single day. So there's a reason why
we're using it to make this right now.
We're using it to try and have people listen to us and watch us. I mean,
Off the bag, Zoom.
It's been a crazy year for Zoom. They IPO'd at $38 a share. I can say that I owned it at 60 at one point, and now it is 400 a share. So this is another one of those ones where you probably should have just held it, Ryan. What the fuck
we are bad at this. We just need to realize this. Yeah.
I mean, everything we mentioned turns to gold, so we should probably take our own advice.
It'll probably go to 600 now. I mean,
add Zoom to my list of just forgotten stocks that I've sold up there with Amazon, Facebook, Nvidia, Apple, Tesla, Shopify. I'm bad at this, and I'm doing okay this year, and I'm bad at this.
Yeti.
Shut up,
I don't care about Yeti.
Also, cut this clip of my instant reaction to not knowing that you had all of those at one point. Wow.
Yeah, this is why nobody has asked me to manage their money.
There we go. Not yet. That's why we're doing this, right? So we can learn on the job.
But anyways, I mean, Zoom obviously has a huge market share now of video conferencing. I mean, that's going to continue to stay the way it is because it's a trusted outlet at this point. I mean, there's other competitors in the space like Microsoft, Cisco, WebEx. I mean, there's probably still room for maybe some competition, but I mean, Zoom's going to blow everybody out of the water. I mean, we've looked for other outlets to use for this podcast, and Zoom is just the easiest, the best. There's nobody out there like it. So,
that brings us to the like overall question. Well, that brings us to the overall question I wanted to get to today of at what point do we reach video conferencing saturation? Like at some point you run out of firms that are all working from home because we've been doing it. The ones of us that are lucky enough, thankfully us three are, that have been able to work remotely for the most part. And you eventually run out of companies that are needing a video conferencing software. Like, at what point do we reach that point? And I know it sounds redundant, but 6-7 months in, is there that much growth still in the future? And I say this, and Zoom still didn't even make $1 billion in revenue this quarter.
I don't know if you reach saturation, honestly. I think the biggest players rise to the top and the other ones kind of fall to the wayside. Big players like Microsoft, Google will stay in the mix, Cisco, but I think the big ones are going to stick around, and the small ones, if they keep making them, aren't going to be successful. I think we're reaching to the point where like it's not quite the same with like back in the day with Google and Bing and Ash Jeeves and all that stuff, where only one rises to the top.
Hey, R.I.P. and peace to Ash Jeeves, man. That butler.
Hey, I know. He was great, but Zoom's got the name, just kind of like Google does.
It became a verb. It became a verb, just like Xerox, like Google, like Post-it. I
know at our firm we use Teams, and I still hear a couple of the boomers say, Zoom in or all that stuff. I'm like, it's like using Kleenex. It's brand name.
Team in, bro.
Yeah, it doesn't have quite the same ring to it. I like Teams. I think it's great, but yeah, Zoom just sounds cleaner, and they were the most successful, I think, in the market. So, like I said, I don't think saturation happens. I think the good ones rise to the top, and then
as far as growth goes, I mean, there's still companies that are being created, and as far as new businesses, they're gonna need Zoom once they start their business. So I think there's always potential there for them to grab more of a market shares. I mean, eventually everyone's going to have some type of video conferencing. I don't know what percentage of companies do right now. I'm sure it's probably 80%, but that 20% that doesn't have it or something, hypothetically, there's still more potential for them to make money. But
I don't know who
Yeah,
doesn't
like,
have it.
yeah,
well, so like
small
obviously
businesses.
it's the physical businesses that have to remain physical. A restaurant's never going to have Zoom, for instance. They might in terms of for
Like
the
a quick meeting,
occasional
yeah.
staff meeting, but in terms of actual operations and execution, no, it's going to be more knowledge and tech companies, as well as just other office staff that don't revolve around the physical presence of a job. Um, yeah, I don't know. Yeah, I think it's interesting how Zoom's easy to use features. It's weird how it's like the catch-22 of so easy to use that's what led to its massive expansion over such a short period of time, and then of course inversely gets it in trouble with security flaws because it was so easy to use, and now they've taken steps to correct those and do fairness, and then now here we are, and it's like we said, become a verb, and everybody is very familiar with the software. And then they go and they crush earnings and they rise up nearly 100 points in 2 hours.
Yeah, I think one of the takeaways for young investors here is, maybe we missed the boat on this explosion of Zoom, but just keep your eyes and ears out there for other opportunities like this. If there's ever some kind of a shift in how people do business, I mean, with COVID, everybody had to go remote and use something like Zoom. Maybe the next thing would be something different. And just think about at the beginning of that shift and momentum, whatever it could be, maybe hold on to a stock like Zoom and let it ride through that entire pandemic or just overall shift in culture. Just think of maybe ideas and potential for long-term change in business strategies or tools that businesses use. So just keep your eyes and ears out there.
Well, like a good example of that is so Zoom has now reached such a large base that growth becomes harder and harder with each passing day, especially as you go international. But so that's why you've seen them pivot to also offering a hardware setup. Zoom's getting into the hardware business of a true work from home setup, of a camera, mic, everything and that you would need for a true I am a working professional, I am working from home, and I am on Zoom setup. And Zoom is going to also be under a lot more pressure I'm talking 2 to 5 years, to monetize all of those users. They're going to have to look for ways to make more money on them, whether that be charging more people for the actual service or going out into other ancillary businesses like hardware or anything else that they decide to go down the path of to starting to capitalize on their such a large user base going forward. And so I'm curious to see what that is. But yeah, at some point it's going to be less of a growth story, and Wall Street's going to come knocking in terms of, hey, where are the Benjamins?
Right. I wonder if they go, like, they're kind of already doing a little bit, but go to like the freemium style where, they offer a base level to everybody. And then
Well, I think
for
that's
the
what
really
they are.
advanced, they're already doing it, but I'm saying
Yeah.
capitalizing on it more so of like, expanding their infrastructure with it for businesses that are going to need and get the premium experience of, hardware too. I mean, I don't know if there's, might be packages and stuff they come along with, but I'm sure they're going to stay cutting edge if they're going to maintain their big name. They'll figure it out.
We will see, won't we?
Yeah. All right.
One last
So
thing I want to say. I mean,
yeah,
I
go
guess
for
we
it.
could
Closing
wrap it
thoughts.
up.
How dare you?
Just
Number one, how dare you? Insert Mindy Kaling office gif.
So I was thinking along the lines of like how this affects young investors. I know I kind of touched on that, like a mindset for thinking about what the next Zoom could be, but also thinking about now that we're kind of have been through this COVID thing for 6 months, the next phase in stocks exploding, I think, are going to be the reopening trends, like maybe movie theaters or hotels, anything like that. Wait for when the news starts to pick up and then potentially look in those areas, because at that point Zoom would go probably down because people are going to go back into the office and not use it as much. And then things like hotel stocks, airlines, things of that nature could potentially rise back to where they were. So just
Right.
keep looking out there.
And on top of
Counterpoint.
go for it.
We've already seen a lot of companies though announce, especially tech companies, that are most likely to be using the service. Obviously, Google is one of them. Facebook's another. I think Twitter might be another. My company hasn't announced any specific date yet of when we'll all start going back to offices, but I think we're in this for a longer haul than just 7 months. We're in this probably for an 18-month haul of offices that are able to work remotely are going to keep working remotely. Likely until we have a vaccine, until there's huge herd immunity. So I don't think I don't think you can expect an immediate transfer of cash out of Zoom into selling that in a drop from a stock standpoint. So if you're a younger investor, this is a tricky one. They've had two quarters of just blowing out expectations. That it's one of those things, if it's too good to be true, it probably is. And that's not a knock against Zoom. That just is, at some point they will get expectations that likely are too big for their britches, for lack of a better expression. And that may cause a drop and may cause money to transfer out to the stocks, like Ryan was just suggesting. So we will see. Justin, what were you saying on that?
Yeah, kind of closing thoughts on that too. Kind of going back to what Ryan was saying is, when things do start to reopen, I kind of agree with you, but at the same time, I'm in the mindset of like companies adapt or they die, and maybe not die completely, but flourish. Maybe should be the right word. I think if they're not able to adapt to this shift in culture that we're going towards, then they're not going to be as successful and return back to where they were before. So, kind of what Ryan is saying is, keep an eye out for the changes and the shifts, and understand and be confident in like what you believe in, how you think they're going to be successful, and that can reflect potentially into their their market value.
Yeah, and a lot of everybody who already has Zoom, especially big company wise, that's already been priced in. Just know that.
Yes.
Stock prices are about 4 to 6 weeks out in the future, and every big company that's already, including mine, that's already has them under contract and has had them under contract, that's been priced in of the revenue from those companies. So it's all going to be about turning more to like a Facebook ad model of starting to get more money from small to medium-sized businesses. So we will see how that goes in the future.
All right, I guess Pate, on to you, man. Talk a little bit about airlines. What you got for us?
All right. Yes, as our resident frequent traveler, coming to you live from the Rocky Mountains as we speak. Fortunate enough to be up here for a couple of weeks. I wanted to talk to you all about some news that actually broke yesterday, and then today some follow-on news that United Airlines on Sunday actually eliminated their change fees from most of their domestic flights. That is huge. That's a huge moneymaker for United. And then what's even makes this even to a bigger story is that Delta and American Airlines also followed suit just only a day later. I don't know about y'all, this brings back memories of when the dominoes started to fall, when Robinhood finally forced platforms like E-Trade, like Charles Schwab, like TD Ameritrade to eventually cut their commissions to zero per trade. I'll be curious to hear what y'all think on that. But yeah, just some other setting the stage and facts on this. So American actually went further and cut their change fees on their shorter international flights beyond what Delta and United did. That they don't, these aren't going to extend to the basic economy fares, aka not the fares us three flew over to London and Europe on 2 years ago, where we literally had to pray that our flights didn't get canceled and prayed that our seats would actually be decent when we got on those planes. that American and United passengers in the future are actually going to be allowed to fly standby on earlier flights with seat availability. Going into the future, it's going to be, I believe, American before United on that. And that, yeah, these are really big monetary hits to the airlines. American and Delta each was $800 million in revenue alone, each of them, plus over that figure just in 2019 alone. And United booked over $600+ million in change fees over the past, that's a 5 times increase over the past decade. So I'm curious to hear what y'all's thoughts are on the elimination of those change fees on most of the domestic flights, and then for American, the shorter international flights, considering that air travel is still down 70%.
I mean, as a consumer, I think I speak for everyone when I say this is very exciting news.
Yes, and that's where I was ecstatic. I
Right.
fly Delta a fair amount, even obviously more so pre-pandemic. But I've gone on my second plane flight now since pandemic, and I felt safer doing that than Justin, you and I beach volleyball league earlier this year. But I think it was a welcome relief as a consumer of not knowing that these were going to expire, and you're going to start getting ding 200 Benjamins or 2 Benjamins every time that something came up and you needed to push your flight back 3 hours.
Right. It's feeding into the whole uncertainty of the situation we're in right now, and hopefully it stays for a while going forward. I mean, I'm hesitant. I've been hesitant to get on any flights recently. I mean, for multiple reasons, but to book anything, well in advance, because you don't know what the situation is going to be like,
Yeah.
3, 4, 5, 6, maybe even 8 months from now, because you don't want to have to pay those change fees, and it's worthless to even try to schedule a flight that far in advance right now. This could change a lot of that for confidence levels of consumers. I think it's going to reflect heavily on the value.
Yeah, are you thinking of like the flights that are a couple months out? Because the change fees have been waived since March, I believe. But like they were set, they all were set to expire, and I guess they still were. And eventually, and then something that's curious is our home state airline of Southwest Airlines has never had change fees this entire time. There are obviously different reasons to fly Southwest over an American, Delta, or United. I self-admittedly am a Delta Medallion member, and I'm now very biased, having flown multiple airlines over the years. But yeah, this is like you just said, this gives some relief going forward. But like it's going to be the airlines are going to have to find a way to make up for this nearly $1 billion loss. We were just talking about Zoom. This entire total market of ancillary fees was almost what Zoom does in a year of revenue. That's how much it was worth, nearly $2 to $3 billion. So Ryan, what are your thoughts on this? I'm curious.
Yeah, so I think airlines are just kind of lost, and they're trying to find their way at this point. They're trying to find any way to attract business, and this seems to be one tactic to try and get people on those planes. I know they're not filling the middle seats still for, I believe, is it all airlines?
I know Delta isn't. I don't believe Southwest still is. American and United are, and I don't know this for a fact, but that's why it pays to not have as bad of a balance sheet as the airlines that currently are still blocking off the middle seats.
Yeah, I mean it does kind of come down to those balance sheets, right? Like with the decisions they make. But when something like this happens, I think everybody has to follow suit. And it seems to be, I mean, I'm not very picky with what airline I fly. It just always comes down to what's the best deal. I mean, there's a couple that I won't fly just because of leg room issues, but like Frontier and Spirit or any of those.
Hey, Pate, do you deal with that one?
I tried one time and I literally couldn't fit in the plane.
I can say I've never had this problem on the plane, except United direct charter flights. I did have issues with those. Even I had been down on those planes, so I can't imagine what y'all had to do, or the Texas A&M basketball team had to deal with on those planes.
But no, I think, I mean, this is interesting. It's a dynamic situation with the airlines. just trying to get more business. But I mean, they're still in trouble. I mean, it's all dependent on COVID. It's another opportunity though. I mean, these stocks been beaten up because of COVID. They're going to come back at some point. Just continue to look to see, I mean, the trends with COVID. If it's getting better, then these stocks are going to get better. If there's positive vaccine news, they're going to also rise. I mean, just continue to watch out. But yeah, with these changes, I think it's just to try to attract business, in my opinion. I don't really know why else they would do it.
Yeah, I agree with that. And I think even less about it from a stock standpoint, from just a customer loyalty standpoint, when that's what I think they're going for, because they're giving up nearly $1 billion of revenue per year. Or if you're United, closer to $500 million, the other two closer to $1 billion. I think that they've realized that retaining their customer base is going to be the most valuable thing for them to do in the next 2 to 5 years, waiting for travel to rebound, especially business travel, which is that's the reason I used Delta, was what was paying for the majority of my tickets. And then I became a medallion member through those flights. And that's what I think. It's almost, I don't think it's just a race to the bottom, like say Grubhub, Postmates, Uber Eats, food delivery price war per se, but I think you're going to see each of the airlines trying to jockey for position, at least the major airlines, not necessarily your favorite, Ryan, the Spirit or Frontiers of, or the Irish Frontier of Ryanair. But yeah, Justin's got fun memories of that plane. But
TSC there.
yeah. I remember the flight attendant looked at me like I was an idiot because I asked for a water on that plane, not knowing any better that I was going to get charged for that. But I digress. Yeah, I think you're going to see them start to jockey for positioning on not only customer loyalty, but ways that in American did analysis, ways that they can start to offer upgrades, especially for the lower fares. To try to get people to entice them to book those lower fares in the aspirational, oh, I might get upgraded, and that's half of the fares I book. I'm hoping to get upgraded, and I did on my flight up here to the mountains, and I'm hoping to on the way back. Some of that's just because of the empty planes, but that's how I've been operating the past 2 years anyways.
Right. It's a tough deal, man. Like, I'm sure they're trying to find that balance for sure and try everything out and just, throwing stuff at a wall and see what sticks. Do you think that they're going to maybe maintain this kind of treatment even past the pandemic? I mean, it might be one of those things where to stay competitive, one might stick with it. And so it makes the other ones follow suit because it sets them apart, or could set them apart if they don't. Stick with it.
Yeah. I think going back to like the major stock brokerage didn't get rid of commission trades until they had to. The major airlines didn't get rid of change fees until they had to, because one of their main competitors did. I think that whatever's going to justify a competitive advantage, even if that means them taking what is now perceived as a loss, but that might not have been perceived as a loss 15 years ago, in the names of customer loyalty and getting that recurring revenue. I think they're going to deem that as more valuable, at least in the short term. We'll see going forward, and let's pray they don't come back. I think airlines are one of those industries that is kind of extraordinary how much they're able to get away with price. I don't want to say gouging. At some points that definitely is the case, but just price inflexibility and how the consumer and the customer is not the beneficiary a lot of the times in terms of airfare bookings, airfare refunds, change fees, all of these, just upgrading your seat. You're basically just, they're charging you an arm and a leg to pay for luxury, for privacy. And then we'll see going forward. I'm really hoping it doesn't end up having to pay for just 6 feet of space in the plane.
Yeah, I mean, they're going to figure out ways to make their buck. I mean, there's some really interesting like articles and even books on the evolution of flying from wherever it started. I guess 50s and 60s when it was commercialized, and then throughout the years of luxury became less and less of a thing and more of a huge burden on the consumer, people that couldn't afford it. I wonder if we shift a little bit more towards that to, like you said, keep customer loyalty. It'll be interesting. Or if they build it into the price of, that they're not able to charge the change fees, if they do a little bit of price gouging and add it to the price that's built in with the ticket to cover that small amount of loss. I don't know. It'll be interesting to see what happens in the next year or so.
Yep. Surely you can't be serious though, and stop calling me Shirley. That's an airplane quote. Next segment.
Best thing I would say on that is Buffett dumped those stocks, so why don't you?
We are not giving suggestions, Ryan. We are not.
No, but we can. I think that's fair to say for young investors to watch out on these. These could be perceived as value traps.
Absolutely.
Airlines make the majority of their money on business travel. It's gonna be a while before business travel has come back to pre-pandemic levels. That's the macroeconomic advice we will say for that.
There you go. Well, I guess I'm up. So as I kind of mentioned last week,
Ryan and I definitely killed our segments.
Oh yeah, absolutely. We all had a little more interesting segments, but this one we're gonna make it interesting. This one actually matters. No, I like y'all's. So as I mentioned last week,
McDonald's CEO.
That is not a segment.
Matter.
That was all of ours.
It was the beginning segment.
I still have the best segment of all time. It's Justin's point of the question of the week. TM coined that term right now. Let's put it in the system.
You can pay lawyers to trademark that. I'm not.
I got it. My future roommate's a lawyer, so I think I'm good. All right, so I hate you. She doesn't pay rent, so she's not a roommate. Worst roommate ever. Anyway, so as I mentioned last week, we had the August consumer reports come out last Friday. Two of note, one, the Conference Board Consumer Confidence Index, say that 5 times fast, and the University of Michigan surveys of consumers. A couple points on each, just run through it real fast.
Go blue.
So what was that? No. Go blue? No, what are you doing, Ryan?
I'm just throwing in the University of Michigan,
As you have Texas A&M in the background. All right.
Yeah, if you're gonna at least say "go blue," you got to say it with a Michigan accent. Go blue.
Go blue.
Anyway, so before we get into that one, the Conference Board Consumer Confidence Index. I still can't say that correctly.
Jesus.
I know. They do a monthly survey based on probability design for random sample and analytics for what consumers buy and watch. So it's basically a pulse on the consumer behavior and what they believe.
So they look through your Amazon history?
No. They're somehow less invasive than that by asking personal questions. Still less invasive. So what happened was they had a sharp decrease from 91.7% to 84.8% for their index for the confidence. So basically this was the decline for the second consecutive month, which is fairly rare, especially for a decline this much. Basically it's a reflection of the consumer's optimism or lack thereof in this case for the short-term outlook on the consumer. And so this covers like all aspects of the job market, business conditions, and this is skewed relatively towards negative from the past survey. People are basically pessimistic in general towards a short-term outlook. Expectations to improve over 6 months declined, and they're expected to worsen. And that rate increased. So keep in mind, this is percent of people answering these questions in the affirmative, not like they think as a percentage this is going to happen. It's the pulse of the actual people like you and me that are studied at random.
Yeah, it's sentiment,
Right.
And I'm glad you broke that down for those of us who got rounded letters in econ back in college. I actually do appreciate that. But yeah, and I think, obviously we're an apolitical show, but a lot of this comes down to that there is no second stimulus bill. At least at the moment of this recording, both sides are far apart. we will see where it lands on that. And I think that's what's factoring into a lot of people's decision making, is that the road ahead is not as financially fluid, at least on a personal level. And I think you're going to start to see our worst economic factors start to factor in a lot of people's discretionary income spending going forward.
I know for me personally, like I'm not penny pinching or anything, but I'm taking a heavy look at my budget. And like, I think we're all three of us are pretty fortunate in our current scenario,
Oh
but at
yeah.
the same time, we're looking at our monthly budgets and making sure we're going to be okay in case everything just goes, bottom up. I mean, got to be prepared for that scenario. And then for people that aren't as fortunate as us, I mean, yeah, I understand how their confidence can go down, especially with no stimulus bill in sight, or you know, and even the unemployment rate going up. It's worrisome for a lot of people, and even though it's still 84.8% of confidence, like relative to what we normally see, it's not good, and
Yeah, I
it
think
reflects.
everybody out there is wondering, where's their next paycheck going to come from? Unemployment's at a record high. I mean, right now they're more worried about just feeding their families, being able to cover the essentials. As far as consumer confidence, it's going to be low because they're not going to be going out shopping online for new pair of tennis shoes or anything of that nature if they have just lost their job, because their paycheck's going to be reduced in most cases. And I mean, this is just going to continue to steamroll until there's some kind of a recovery. Hopefully that's sooner rather than later.
Yeah, I think a lot of that, we can do a whole 20-minute segment on just the dichotomy and bifurcation of not only the S&P 500, Dow Jones, and NASDAQ from just Main Street and the economy in general, but we're seeing a lot of income disparity, especially amongst those in minority neighborhoods and frontline workers compared to those of us that are knowledge workers and are fortunate enough to still keep their jobs and only need an internet connection to do work from home. So that's why I think maybe, I mean, Justin, do you consider these numbers almost an average between those two cohorts of people? Because while it is declining, I do think you're seeing less and less potential higher earners you spend more frivolously on discretionary income and start to save more, like you just mentioned. Um, and then, like what Ryan said, people take care of the Maslow hierarchy of needs. You're going to take care of your food and water situation
Yeah.
first. You're going to take care of your shelter situation second, and then you're going to move on from there, down what you can afford. Do you think this is more of like an average of, and a decreasing average, I guess, of people's sentiment of between those high income earners and the lower income earners? I'm not saying that's a fair, that's just the state of the reality at the moment of our economy in the U.S.
I think probably so. It's hard to say because I mean, obviously, we don't know exactly who they surveyed. It's supposed to be completely random, but yeah, that would be my pulse on it at least. I think you kind of answered your own question there. I
I
completely
tend to
agree
do
with what
that.
you're saying. Say what?
I tend to do that.
Yeah, I don't hate it. Yeah, no, I really think it's a pretty fair average of high earners, low earners, and everything. And it's just really getting pulse. I don't know if it means too much, and the reason I say that, at least for short term and long term as well, because University of Michigan's survey of consumers showed very little change from last month. That might be because it might have been a little bit ahead of itself for July, but their changes for index of consumer sentiment, current economic conditions, and the index of the basic index of consumer all were basically negligible. They actually all rose a little bit, upwards of like 3%. So it wasn't really significant. People that they surveyed might have been a little more pessimistic just in general. It's a large survey, but it still is obviously skewed data in some ways. So um, I don't know if you read too much into it in the grand scheme of things, but I think in like relation to stock market and young investors, of like you could kind of see it hit today. I mean, a lot of things were in the red just based off the consumer report. A lot of
if actually you just take out the Apple and Tesla gain on just the stock splits, everything was going to be in the red today. So like Justin, if you had to boil it down into say 3 points for younger investors, what would those be?
I mean, number one, I think what to take away from this is just be in the know of these reports that come out monthly, and it gives you really a general sense of what to expect with just general population. It may not be accurate in like the actuality of the situation, but that is the sentiment of the population, of the general population.
It's getting a pulse,
and that's going to reflect, right? Even if they're wrong, but that is, it's perception maybe more powerful than reality sometimes. In this case, might be both, but just going forward, I think looking at it. Say that again.
You're seeing that in Tesla stock. That's a whole
other segment. Yeah.
Perception stronger than reality. Anyway, continue. Second point.
Second point. Yeah, Ryan, I think you got something to say there, buddy. What you got?
Ryan, you're doing bad radio right now. Speak.
That was me giving Johnny Manziel Money Manziel sign. So basically, yeah. Everything was in the red but Tesla and Apple because of the splits. And some of us followed that and some of us didn't. I don't know.
So I guess the second point Ryan is trying to make is it can drive the market. But the third point I would say is use your own common sense, do your own due diligence, and know what this actually means and what the reality situation is and what makes sense to you. And this isn't the whole driver, but it is part of the equation sometimes. And just be aware of it, I think is really what the point I'm trying to make is.
Yeah, especially be aware of your own financial situation. Us three alone have varying financial situations. Exactly. It's not the same for everybody. Know what you can afford, know how it all affects you. Take care of that Maslow hierarchy of needs,
Right. And so, yeah, exactly. And in that same vein, a couple of reports coming out this week, just to be aware of. Tuesday, we have the U.S. manufacturing PMI, which basically, boiling it down to what you need to know is if it reads above 50%, essentially it shows the economy is generally expanding. The higher the number, the better situation, the more it's expanding. Currently, just to get a pulse on this, we're around 54%. So hopefully when this comes out, we're at or above that number. We'll see. Wednesday, we have the U.S. ADP non-farm payrolls, which essentially will help determine unemployment rate. So keep an eye out for this. Could have impact on the market. And this comes right ahead of the U.S. unemployment rate for August, which is coming out Friday. This gives a lot of indication on the sentiment of the market as well. Kind of the same vein of what we talked about today. That's all I got on this, guys.
All right. Well, if you made it to this point of the YouTube show /podcast, bless you for sticking with us, especially through the economic data segment. I can't help but laugh when we're talking about that. But yeah, make sure that you subscribe to our show, that you give us a 5-star rating if you're listening on a podcast. If you're on YouTube, make sure you like and subscribe to us, and we will make sure that we respond to you with any comments. Make sure that you post, DM us as well. We will get back to you, and we will see y'all next time.
Peace.